Welcome back to Market Fatafat, and let's focus to Jana Small Finance Bank, which is all set to hit the IPO market. Let's go across and listen in to that interesting conversation that my colleague Ajay had with Ajay Kanwal, who is the MD and CEO of Jana Small Finance, on their IPO proceeds and the company's growth outlook.
IPO size, which is the primary issue, is 462 crores. The offer for sale is about 26 lakh shares. So the price band is 393 to 414. So if you take a sum and substance of both OFS and the primary, which is 462 crores, it'll be around between 550 to 575 crore range. That's the total size of the issue. As you can expect, the primary capital that we're raising will go entirely towards funding our future growth. As of September, our CET1, or rather our total capital adequacy was 17.5, and that will go to early 20s, so to say about a 21 to 23% range after we add the total capital.
Right. Ajay, let's understand the overall proposition. Much of your details are already there in the RHP, but from the management, I'd like to understand more of the story of Jana Small Finance Bank and the proposition than, the fine numbers, we can all refer to them. How is the business model differentiated? And, yes, large part of India is still unbanked, but in the, the urban centers, at least competition is also too high now for deposits as well. So how have you engineered your business model of Jana?
Right. So a few things for as a background. See, Jana's origin was a microfinance institution. And when we began the bank, we decided that it's very important that we focus on all customer needs. And when you do that, you end up first thinking about his mortgage. You think about his business and see how we can finance his business, either unsecured or secured. And then you think about what else does he need, like two-wheelers, etc. So our journey in 2018 began as a microfinance institution. But as I speak to you today, Ajay, our 57.8% of our book is secured. So Jana is incrementally over the last 5.5 years reflecting the balance sheet of a consumer. A customer's typical balance sheet has to be, the largest asset has to be home loans. And of course, following that could be a car loan, a two-wheeler loan, and so on and so forth. So few things about Jana and the transition. Number one, we decided that we will become the customer's bank of first choice. When he wants something, he should come to us. We should make sure that our customers should get everything from us as much as possible, because nobody likes to go to 6 different banks with 6 different KYCs, with 6 different repayment ideas. You really want to concentrate in one place. So that was our origin. And of course, we wanted to make sure that as a bank, we should be diversified and resilient, which is why we moved to secured. And naturally secured because the customer's need was secured. Now, to your question, Ajay, saying how do you compete? Listen, our focus is very simple. We are an affordable housing space. My average ticket size of my home loan is about 12 lakh rupees. When I do small business finance, typically against property, it's about 10 lakh rupees. So I'm serving in my focus the middle end of India. And there is huge opportunity here because clearly the amount of penetration of credit is not high. I mean, if you just take mortgage as a percentage of GDP, India is about 11%. That is at the lower end. You compare it to a US at 52 or a China at 18, there is still a long way to go. So that's really our business model, which is 1, making sure we serve customer needs, 2, turning more secured. And of course, we are a national franchise across 24 states with 770 branches. So we are very geographically diversified. I know I gave a bit of a long answer, Ajay, but please, things I've missed in between, happy to answer.
No, fair point. We need to understand the model, so it's important. I want to scratch that point on middle India a little more. We've seen this government has also taken initiatives for serving the middle India better in terms of tailwinds are there in sector. Yesterday too, our finance minister did speak about housing for middle class. I want to understand how structural does this opportunity look for you going forward? Does it have long tailwinds? And also that idea of higher share of wallet of your customer. You're not going behind the volume or the number of customers, rather you would go with a moderate growth towards customer acquisition, but would like to have a larger share of wallet of that customer. How do you integrate the two?
Correct. So I think the first answer, the second one is the easier answer. So Ajay, whether you are a customer who is very rich or you are a customer who doesn't have too much money, your bias always is to go to a single place and finish all your activities, right? So our first bias is that, listen, I rather have happy customer than have too many customers. And what will make my customer happy? I think in today's world, as long as he gets everything under one roof, we give him in a very digital manner, our products are very competitive, and very importantly, service is high standard, then I think customers will be happy. And I think customers are happy, the bank will grow always. We don't have a growth problem. So I think that's the first piece. And thankfully, if you ask me like 30 years back, would I do middle India heavy banking? I would worry about cost of serve. But today we are so digitized that cost of service making is very small. Cost of servicing is small. Everything, a lot of it is self-directed. Everything is available so easy on a mobile app that you really don't have to worry about cost of servicing or cost of acquisition also now. So which is why I think our model is very simple. The other thing I said is we should reflect a customer's balance sheet. I don't think so. On an average, customer balance sheet is 60 to 70% unsecured. It has to be 70 to 80% secured. And over time, I think that is where the bank will have really its foundation. Now, middle end of India. I mean, how should I say it? Yeah. So very simple. We have seen a lot of businesses. There's a small business in Chennai, and what businessmen do, and these are not very structured, and these are small businesses. Moment they get an order, they go and take a personal loan. Now, what happens when you take a small personal loan is you're paying over 2 months, your interest rates are high, you get the next order, you take the next personal loan, and so on and so forth, right? So you tend to finance your business through a series of short-term loans with high repayment and high interest. Our job really is to meet this customer and say, listen, you need to take a 5-year loan to things that you need to really invest in, and here is an overdraft for you. Overdraft will save you interest. Whenever you need, you can draw it down. Otherwise, you pay it back and life will be simple. See, the idea really is we can actually democratize credit in a serious way because all this through digital is very easily available. And the biggest challenge is financial education and having the right risk models to reach these customers. As long as you use those two, I think for us, growth is not a problem. And I would say, Ajay, two points on that. Growth is not a problem because of size, but also our economy is doing so wonderfully well. So I think if you add up the two, I think the bank should continue growing well.
All right, so that's the management of Jana Small Finance Bank, which is going ahead with its IPO. But on that note, we are totally out of time in this edition of Market for Tougher.